Don't forget, you can reach the latest episode of Potomac Watch anytime. Just ask your smart speaker, play the Opinion Potomac Watch podcast.
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome back. The story that you're hearing from President Biden in the White House, though, is that taxes on the wealthy in particular need to go up. Here is what the president said during his recent State of the Union address. Look, I'm a capitalist. If you want to make or can make $1 million or millions of bucks, that's great. Just pay your fair share. A fair tax code is how we invest in things that make this country great: healthcare, education, defense, and so much more. He went on to say that no billionaire should pay a lower federal tax rate than a teacher, a sanitation worker, or a nurse. And I am skeptical that as a class, there are many billionaires who are paying lower taxes than a teacher or a nurse. The IRS data suggests that that is not true, that billionaires as a class, the top 0.1%, are paying income tax rates effectively of about 25%, which are higher than people at lower income levels, though there may be a reason, such as losing a lot of money in a given year, that a given billionaire might not be paying much income tax, if any. But Alicia, can you give us a sense of what kind of additional taxes is President Biden calling for?
Right. So just on the first point, it's an apples to oranges comparison, but I think he's really calling out is the lower capital gains treatment versus the ordinary income treatment. Capital gains are for high earners are taxed at a 23.7% rate. When you include an Obamacare surcharge, for most people who are lower earners, it's about a 20% capital gains rate, which can be lower than some wage earners pay on their ordinary income, at least at their top marginal rate. Now, Biden wants to raise the capital gains rate and make it equivalent to the ordinary income tax rate for high earners. And on top of that, he wants to increase this Obamacare surcharge to 5%. So what you would have as a result is that the top earners would actually be paying a top rate of 44.7%. Now, if you add in state taxes in places like New York City or California, that's almost close to 60%. So that's one way he proposes to raise taxes. Another way is to increase or extend the Obamacare surcharge to the profits that are distributed to pass-through entities. That would apply a 3.8% net investment tax on the profits or the distributions to small businesses. And this would apply to people with small businesses income just over $200,000. That's not rich, no matter what he says. And he keeps saying that I'm not going to raise taxes on anyone who's earning $400,000. Well, that's patently not true under his plan. Some other proposals he has hits more on the corporate side. He would wants to raise the corporate tax from 21% to 28%. He also wants to impose this new billionaires tax. I mean, he pitched this in the past that would hit the growth in asset prices. It wouldn't just hit income, though he wants to expansively define income to include unrealized capital gains. And, on and on. All these taxes would only raise about around $4 trillion in revenue, which doesn't even come close. That's basically 2 years deficit. And so, as the Journal has constantly pointed out, the only way you could really balance the budget or pay for all these spending ambitions is to tax the middle class more.
2 points. One is that the other thing that Biden consistently seems to be doing is mixing up, conflating, I think intentionally, income taxes and wealth taxes. And he did that again during his State of the Union, saying that the tax rate being paid by billionaires is only 8.2%. But that appears to come from a White House study of America's 400 wealthiest families. And it says that it uses a comprehensive measure of their income that includes income from unsold stock. And so, Kim, that's part of what he's doing here is defining income to include wealth and art collections, maybe, and real estate, and then complaining that the income tax does not tax things that the income tax does not tax. And so I think that's important for listeners to keep in mind. The other, and I would underline Alicia's point here too, is that the problem in Washington Washington, to my mind, is spending. And even if you raise taxes, think about all the things that President Biden has proposed, to say nothing of all the things that Bernie Sanders has proposed. You eat up that additional tax revenue pretty darn quick. And the problem is not that there is not enough taxes being paid. It's that the spending ambitions of those politicians in Washington are almost limitless. And Kim will give you the last word.
Yeah, well, those numbers that you just pointed out that they gave in that White House study, they have to do that, because I'll just go back to the actual income tax data that came out of the IRS. Top 1% paid almost 46% of all income taxes. Top 10%, almost 76%. So the only way they can make it sound as though the millionaires and billionaires, or simply the wealthy in the country, are not paying their fair share is to start going after this wealth tax question. And this has been the new hobby horse of most progressives, is to bang on. I mean, the other issue about this, which we haven't gotten into, but that this is an immensely complicated thing. Most countries that have instituted a wealth tax have given up on it, not just because the wealthy just decided to repark their money and themselves in another country to avoid having to pay that tax, but because it's immensely difficult to even calculate things like this and to decide when you actually tax these people. How can they continue to do it if they have assets that are not liquid? Can they actually do the tax? So there's all kinds of technical questions wrapped up in this as well, too. Your point, though, Kyle, about the spending is key. I mean, this is a president who has already added $5.9 trillion to debt just in the last 3 years. And that's not counting some of the costs, a lot of the costs that are still going to come from the Inflation Reduction Act and all of its green subsidies, or the infrastructure bill, a lot of which is built into the out years. But if you look, and we've written a couple of pieces on this, if you took all the billionaires, for instance, according to Forbes right now in the country, and you combined all their assets, all their wealth, all those intangibles you're talking about, stock values of private companies and real estate and their art, they're worth about $4.7 trillion. Okay. And, you know, that wouldn't have even covered Bernie Sanders' Build Back Better agenda that he was proposing. It would be about that cost over 10 years. Don't even think it could do anything for Medicare, for instance, $33 trillion over the next decade. There's no money there. So to Alicia's point, the only way in the end that you can fund these ambitions that Democrats have is to tax the entire country, middle class in particular, to pretty much all they have, and then become a redistributionist society. That is, of course, what Democrats would like to see. But I think it needs to be in far better focus as we go into this next election, just how clear that ambition has now become on their part.
Thank you, Kim and Alicia. Thank you all for listening. You can email us at pwpodcast@wsj.com. If you like the show, please hit that subscribe button, and we'll be back tomorrow with another edition of Potomac Watch.